Well, some of you might have missed the liftoff this morning and the ultimate landing in the Gulf of Mexico. But let me just give you a quick report in case you didn't. Starship number 4 had a perfect flight and a faux landing as the booster with the booster this morning, putting down into the Gulf as if it were trying to land on water. Quite a spectacular sight. There were some loss of tiles, and Elon Musk mentioned that this was an issue, but the landing was able to happen even with those loss of tiles. So congratulations to Elon and to his team, and also to all the humans on Earth. The capabilities that are going to be unleashed by Starship will bring greater wealth to every being who chooses to seek that wealth. All right, this is from the street this morning. Canaccord Genuity analyst George Gianark. Yeah, I should have looked that up before we did this. Gianarkis. Anyway, lifted his Tesla price target by $45 to $267 a share in a note published Thursday. He's also looking for year-on-year growth. He says, over the last several weeks, we have dramatically improved our global Tesla delivery tracking. So they're paying a lot of attention. Maybe they'd like to provide us with a copy of that tracking. He said his team, they've tirelessly scoured the web for country-level delivery data. We have gleaned some meaningful insights. Canaccord sees Tesla's second quarter deliveries coming in around 429,000 units. That's a 7% reduction from its prior forecast and well shy of the street's estimates of 445,000 and my 470. I think I had it over there last weekend. It's important to note we estimate June month trends by country. June is typically the highest sales month in the quarter, and we do consider that seasonality in our estimates. So that could be the reason why Tesla's a little bit off this morning, although as you may have heard last night in my conversation with Jeff Lutz, that maybe people are just trimming and being a little conservative right now going into that meeting next Thursday. It might be hard for Tesla to get any traction at all. So Gianarkis also trimmed his full-year forecast to 1.86 million units from the earlier estimate of 1.93. He sees a 3% growth compared to year earlier levels. All right, so I'm sorry, there was more. We maintain year-over-year growth based on Mr. Musk's first quarter earnings call. He said potential for new models to be introduced later in 2024. Tesla shares we're down, as I mentioned last time I looked. They're down. We'll check it in a second. All right. Let's see. Pierre Ferragu is out with a note this morning. He says, we've been very busy with AI infrastructure lately, but it's time to do research about FSD and the robotaxi opportunity. I promise something by the end of June. It will be the prudent and reasonable perspective of how it could play out for real. So we'll all be looking forward to Pierre Ferragu and what he has to say on the subject. This is Randy Kirk, by the way, and hitting like is fantastic. Better is subscribing. I need more subscribers. We need to get that number up. I need to go start chasing the 50,000 level. All right, 25,000 will do for now. NASDAQ closed up about 2% today, according to Gene Munster. That was yesterday. He says he attributes 1/3 of the move yesterday to the morning's jobs numbers and 2/3 to growing investor optimism related to AI, specifically NVIDIA, which was up 5% yesterday. NVIDIA is down strongly today. That could be impacting other NASDAQ stocks as well. We're in the early stages, according to Gene Munster, of a bubble forming. And there's 7 steps to a bubble, he says. Now, I don't know. Bubble is, I hate to use the word bubble. You need to really make sure that you apply words correctly. And bubble is what we had at the end of 1990s. We've had bubbles, and that was a stock market bubble. That was a very unusual circumstance where the stocks were way out ahead of their ability to earn, and people were buying stocks that had absolutely no earnings and probably no real prospects, just because they had a certain word, .com. Anyway, he says, here's how a bubble works. I think it's useful. That's why I put it in here. Number one, market makes new highs. Number two, investors are skeptical that it continue. Number three, markets pull back for a short period, but then rebound to a new high. That's already happened in this particular market. Number four, investors are skeptical that it continue. Number five, markets pull back again for a short period and it rebounds to a new high. That might be what's happening right now. And we'll see what happens over the next few days. Number six, investors throw in the towel and everybody jumps into the bubble bursting. All right. That's number seven, the bubble burst. The European Central Bank this morning followed Canada with a 25 basis cut drop, but said specifically that there was no promise that this was going to start a trend. Yeah, so we've got so now, as a result of that, you're seeing some of the analysts who are trying to predict what the Fed is going to do increase the likelihood of 2 cuts. And you're seeing people reducing the likelihood of no cuts. I'm still a no cut guy, although I think there could be one in November, and that could be followed by one in December as well. But November, I think, is the earliest. Now, again, we talked about that last night with Jeff Lutz also. By the way, if you didn't see that show, I'm going to put a card later about that one. Jeff Lutz was a very excellent show with Jeff last night. Okay, this from Reuters this morning. We had 3 new reports out this morning. All 3 of them, 2 of the 3 in particular, are very important. All 3 though important. They're also probably impacting stocks this morning, although the stock market is really mixed again. Because why? Because the reports are mixed. So listen up. The number of Americans filing new claims for unemployment benefits increased last week. Unit labor costs rose by less than previously thought in the first quarter. So they revised what they had previously thought were in terms of labor increasing pay raises, indicating that the labor market is cooling, but not enough to allay the Federal Reserve's hesitance to begin cutting interest rates. Now, they're going to say that these labor rates went up less than was thought, except that yesterday, what did we see from ADP? 5% year over year. Yeah, and we've also seen it elsewhere. Initial claims for state unemployment benefits rose 8,000 to a seasonally adjusted 229 for the week ended June 1. This is not a big number. It's not that, so this would indicate that labor is staying tight. The labor market has been steadily rebalancing back towards pre-pandemic levels. Yeah, it's, et cetera. The so-called continuing claims tracking, this is one that I pay attention to. Those who are collecting benefits beyond the first week, that increased by 2,000 to 1.792, right in the same spot that it's been for a while. The level of weekly jobless claims remains in a range that's what I just said. That suggests the labor market remains tight. Continuing claims are still very low by any historical standard, and we will still see the data as supporting the notion that people who lose a job are able to find one with relative ease. Excuse me. Data earlier this week showed U.S. job openings in April fell more than expected, and the number of available jobs per job seeker reached the lowest level since 2021. And that is a big number. The JOLTS number is a big number that the Fed watches and that I watch as well. And yeah, it's been falling dramatically so far this year. Earlier on Thursday, U.S. employers announced the fewest job cuts last month since December, and layoff announcements so far in 2024 running behind last year's pace. So there's fewer layoffs, major layoffs. So they can't count every single layoff. Employers announced 63,861 cuts in May, which is a 1.5 decrease from the 64,789 cuts announced in April, and down about 20% from the cuts a year earlier. Year-to-date layoffs announcements are 7.6% lower than they were for the first 5 months of 2023. So we have layoffs, fewer layoffs. We're seeing the unemployment weekly numbers stay in the same range. Anyway, here was the big one, though. This is the one that is shocking to me. And anyway, it just kind of throws everything into confusion. U.S. worker productivity grew slightly less than previously estimated in the first quarter, but exceeded market expectations. The unit labor cost rose by less than first thought. So here we go. Non-farm productivity, which measures hourly output per worker, increased by only 0.2% annualized rate in the first quarter, revised down from the initial estimate of 0.3% a month ago. But economists polled by Reuters had estimated a revision to 0.1%. Actually, some had even said 0.0%. So the 0.2% is higher than expected, but still lower than had been previously thought. Unit labor costs rose at a 4% annualized rate. That's too high, but it had been showing 4.7. And economists had projected labor costs be revised up to 4.9. So this labor cost did come in at a better number than expected. Productivity accelerated and labor costs were subdued through much of 2023, ending at 3.5 and unchanged respectively in the fourth quarter. At the same time, that had been seen as one of the arguments favoring Fed rate cuts. The near stalling of productivity in the first quarter did not further that cause, though some economists had cautioned after the initial BLS estimate was published last month that the data had been influenced by a seasonal quirk and the trend of improving productivity might still hold up. Yeah, there's more on this from Market Watch. Economists polled by Wall Street, we know that. The slight gain in the first quarter is down sharply from the average 2.8% rate over the 4 quarters of 2023. So my expectations were that we would really start to see productivity coming up this year as companies finally laid off those people that they don't really need, that they've been holding on to because of fear of not being able to rehire. This has not happened. Companies are still holding on to those people. We're not seeing those layoffs. And so that's not mentioned anywhere in here, but I think that's the number one reason why productivity is not going up as I would have expected. So you've got no layoffs, you've got everybody can find the next job, you've got the average hourly wages continuing to be up significantly over last year, somewhere in the range of 3.5 to 5%. So no, productivity cannot get that jump it needs. Key details, according to Market Watch, output or other amounts of goods and services produced was somewhat weaker than previously expected. That increase was lowered to 0.9 from 1.3. The output went down. Hours worked was revised down a tick to show a 0.6% annual rate of growth compared to the preliminary thought it was a full 1%. Unit labor costs were revised down to 4% gain from the prior 4.7. We said that just a minute ago. So the big picture, the decline in productivity was due to the downward revision to GDP growth reported last week. Well, yeah, which one of those is the horse and which one is the cart? Is the productivity down because of a change in GDP growth, or is GDP growth down because productivity wasn't as great as expected? I think it's the latter, don't you? Elsewhere, the Commerce Department reported that U.S. trade deficit widened in April as a jump in imports outpaced a slight increase in exports, which is likely to dampen economic growth in the second quarter. Well, we've already seen the dampening all the way down to 1.3% estimate by the Atlanta Fed. We'll see, is it going to be down to 0? The trade deficit increased increased by 8.7% to $74.6 billion. That is not a good number. Data for March was revised to show the trade gap narrowed slightly on that revisement. All right, so let's take a look at what all of this is doing to markets. As mentioned earlier, Tesla is down a tad, down 1.51 to $173.49, with the Dow Jones up 79. NASDAQ down 7.71, S&P up 2.45. So very little action in the NASDAQ and the S&P. You got the Magnificent Seven mostly up. Meta continuing to go up every single day. And NVIDIA down, it had been down a lot and it's picked back up, but it is down $10 right now. You've got the Cathie Woods mixed. Some up, some down, slightly more up than down. And you've got, let's go back. Now we've got the NASDAQ headed toward the green. Tesla is also picking up and heading higher. Dow Jones now up 93. So yeah, everything is headed higher fairly rapidly, actually, from lower numbers this morning. Let's look at the percentages. The Dow is up 0.24%. The NASDAQ is now flat. S&P is up 0.07%. Tesla down 0.85%. All right, let's go ahead and take a look at how bonds might be impacting all of this. Let's look inside at the bonds. All right, we've got the 10-year is up 1.6%. So it's just some profit taking this morning. Yesterday we've had 3 days in a row of dramatic drops in the yields. So this morning up 1.6 basis points. You've got the 2-year up 0.6 basis points. So that continues to spread even more. That is 43 basis points now between the 2-year and the 10-year. You've got the 2-month also down a little bit this morning. So that is going to shrink that, but it's still way over 100 basis points in that comparison. 107 basis points. So that yield split continues to suggest recession. Just say it. All right, let's go on to oil. Oil is sitting at up 1% this morning, 74.85. Brent up about the same, almost exactly the same. So both up this morning, recovering some of the dramatic fall that it had over the last week. We've got natural gas up another 3.37% at $2.85, headed towards $3. You've got gold up this morning, $7.80 at $23.83. Pushing up towards this $2,400 level again. You've got silver up 1.67% this morning and copper up 0.74 at $4.64. You've got the dollar gaining after stronger than expected services sector data yesterday. So services sector was up 4%. That was a big surprise yesterday. You've got Bitcoin up this morning, 71,244. And you've got, that's it. That's everything there is to report. Let's go back and see if the markets are completely in the green yet. Not quite. Stalling out a little bit now in that increase, but very close to breaking even with Tesla now down $1.16. So it's been running right around $1, up and down around $1 down. Okay, let's see. Let's expectations for later today. We have got not sure about Cern Basher. I thought Cern was back from vacation this week. I've not heard from him. I have not heard from him yet, so not clear on what the morning show will be later today. But in the afternoon, we will have Bradford Ferguson as usually we do on Thursdays. I will put that Jeff Lutz card right here from last night. That was a very, very outstanding show. You should go back and check that out. All right, that's all I got right now. It has been great talking to you.